for that. Well, we have Jai Bala of Cash the Chaos joining in on this leg of the show. Jai, always great to have you on. Thank you for joining in. Range, just a range on the market. I think now it's 14 trading sessions, if I remember my count correctly, that the Nifty has been in a, roughly speaking, we're talking about a 500, 550 point kind of a band. What are you seeing? I mean, what sense do you have looking at the overall setup?
Hi, Sylvie. Good to be here. I've been anticipating the market to pull back lower in a stance-up fashion, and the markets are doing exactly that. And happy that the decline has been slow and labored. That's a sign of a bullish consolidation for the markets. The Nifty supports come at about 24,300 to 23,825. So it's quite nearby. So possibly we could see another session of decline, and then the market starts to resume its uptrend. That'll be a sign. If we have one more session of decline, the market starts to perk up. That'll be another sign that the markets are behaving as expected. The Bank Nifty, though, today's session is a weak session. If it were to see a follow through, I think it can pull back somewhere close to 53,400 to 52,900. Again, I mean, in my books, that'll still be bullish consolidations for the overall market.
Okay, all right. Hi, Jai. Good to see you in as always. Jai, I think last week, if I remember correctly, Schneider Electric was the stock that you spoke about. And I think that one just perked up in trade. So first, revise the view on Schneider Electric. And I believe you have a few more interesting names for us. Purvankara, Lloyd Metals as well. What levels are you seeking out there?
That's right, Nigel. First, Schneider Electric, I'm anticipating it to go back to all-time highs close to thousands. So the stop loss that we maintained at 540 when we identified this call, that can be upgraded to somewhere close to 600. And when it comes to the new picks, Purvankara is a conditional buy, not a straightaway. It's a bullish setup. I want the stock to cross 268. If you recall, we had discussed last week that I said that real estate stocks are likely to show some signs of action in the form of rotation, and that's exactly what is happening. Not only just Purvankara, names like Omax, Shobha Developers, and Brigade, they have been doing positive developments for the last two sessions. So that's positive in the real estate space. So as I said, it might have a knock-on effect on other sectors like cements and banks. So watch out for Ultratech. Ultratech, if it were to come close to 11,000, I think that will be a sort of a bottom. It's still correcting. We want to hold somewhere around the 11,000 ballpark and then reverse. That will be positive. And Lloyd's Metals and Energy, I'm positive on that, but the risk rewards are not favorable. But if you're already in a position, maintain trailing stops and it's bullish. Anant Raj is another name that I like within the real estate space. But it's slightly late to get in here, but trailing stops of 500. And if you want to enter fresh positions at about 500 as a stop, it's up to your risk reward potential. But it's not an ideal risk reward for me. But the stock is quite bullish.
Okay, all right, got that sense. Jai, what are you now seeing? By the way, the pressure on the market is telling now. It's 180 points lower. That's what we have. The mid-cap index is also down about 0.5%. And remember, this is now, we need to see if the US market can shrug off. I mean, yesterday was a day when the market shrugged off this whole issue of tariffs and, 50% on steel and aluminum, because the war of words is continuing, not just between China and the US, also between EU and the US right now. And US futures themselves are lower. I was just coming to that question, Jai. I mean, what are you reading when you're looking at, say, the dollar bond yields, the US market setup? What does the sense tell you?
Yeah, the US market setup is quite interesting, Surti. The S&P had its best May gains, May month gains since 1980s. So 1990s actually. Whenever the May month has clocked a gain of over 5%, the S&P has gone on to give positive returns 12 months rolling forward. All 6 other instances have been positive returns. So this might happen to be the 7th instance. And the lowest gains has been about 8% 12 months forward, and the highest has been about 30% 12 months forward. So that's a very interesting condition the markets have. This is not fatalistic. We need to follow the trend, but it's a good condition to have. When it comes to the dollar index, we're seeing some side of the pressure mellowing down. So I'm anticipating some counter trend bounce to come through for the dollar index somewhere close to 103 to 104. And this naturally leads to the precious metals gold. Gold has been having the worst month since 1990s in June. So an average loss of about 0.5%, but it tends to have the worst decline during the month of June. So that's risk-on positive for equity markets too. So when it comes to yields, the 10-year yields are locked in a range. Above 466, I'm bullish on the yields. Below 410, I'm bearish on the yields. So right now, it's sort of middling. So watch for this range to break out. Once one of these boundaries gets broken out, we can have a clear direction on the US 10-year yields.
Okay.
Okay, all right. Jay, I wanted to ask you about another asset class. What about the Bitcoin? At around when it went to 75,000, people are calling for lower levels. Surprised everyone went to 110,000. At current reckoning, what do you think? It'll pull back a little bit more?
That's right. Bitcoin is a signal of risk on, risk off. And now we've got fresh record highs. That's another indication that we need to be bullish on equity markets. The current pullback could take Bitcoin somewhere close to 103,000 to 95,000. So that's my reckoning for the moment, and anticipating higher highs to come through. But that will be a final high somewhere close to 125K to 144K. That's the short-term objective I'm working with. First, a drop slightly below 100,000, then a recover to fresh record highs.
Okay, all right, got that. So you're saying another indicator that equity markets are probably headed higher. That's the way risk assets are shaping up. Got it. Jai, stay on. We'll come back to you for some more questions on the local market here. Welcome back. Well, we are in the last leg of the day's action, and the story is that it's probably going to be ending as a down day, about 0.7% lower on the Nifty, and for a change today, even the mid-cap index is on the downside. Let me ask you about some of the defense names like shipbuilders, etc., Jay, because you have an overall positive view on the market, and this has been the part of the market that has the maximum momentum. Though the fundamental news flow earnings, that could be patchy. What's your advice on stocks like Garden Reach, Cochin, Mazagon? What to do here?
Yeah, still bullish here, and I was earlier not bullish on Cochin Shipyard, but it's quite late when it comes to stocks like Garden Reach and Mazagon. I've been bullish on it since November. I anticipated it to bottom, and it did bottom around the anticipated levels. But Cochin Shipyard might have a little more steam. If it were to clock another higher high, I think it's likely to retest its all-time highs about 3,100. But the risks rewards have to be measured properly. Better to buy on pullbacks rather than go at current levels of 22,000 odds. But yeah, the risk reward, if it were to pull back, will be more attractive. A little late in the game from a sector's perspective overall. But select stocks like Cochin Shipyard might try to play catch up with Mazagon and Garden Reach. So that way, be selective about your picks. If you can probably look at something like BEML, which is in capital goods as well as in defense space. So maybe that might make a little more sense than Cochin Shipyard.
Jay, after the big run that you've seen on gold, you have an equally bullish segment of the market and an equally bearish as well. Some say that gold will not do anything for, say, the next 12 to 24 months from here after the run. It's moved like a mid-cap stock. It's up 50%, I think, in 18 months. Which camp are you in? My home minister tells me that gold is going to be blockbuster. And I've got a younger one as well, who's even more bullish because she's going to be getting all of it in the next 20 years. What's your view on gold from here on? $3,400, pull back to 3,000 for a day or for a few hours and rocket yet again. What's your take?
Yeah, you have to look at every asset class dispassionately, Nigel. And if you look at gold, it's right now from 3,500 record levels, it's clocking lower lows. But things can change if it were to close about 34.40 on the London fix. But as long as the precious metal stays below 34.40, it still continues to clock lower lows. So I'm anticipating, I've been still anticipating some correction to come through. For a bullish reset, a sharp downside somewhere close to 2,600 mark. That's been my case. But I will revise the case bullishly if gold were to close above 34.40 on the London fix. Right now it can go either way with a slight edge, very slight edge for the bearish case.
All right, Jay. That's.
Jay, just want to ask you just one more thing before Surbhi comes to you. Gold or silver, what is better? I mean, what's looking better on the charts?
Yeah, silver. I mean, I've been slightly bullish on silver for the short term because the gold-silver ratio needs to, we are somewhere closer to the silver's favor, silver precious metal, silver's favor. So that is actually what is happening. One more record high for silver. 52-week high, not record high. 52-week high for silver, about $35 on the international silver, and post that, I think gold and silver will start to decline together. But in the very short term outperformance for silver.
Short-term outperformance, perhaps in precious metals, but medium-term equities it is. That's what you're optimistic on, including India. So that big headline remains. Got it. Jay, thanks very much for joining in. Good conversation as always.